Hi everyone, we are Blue under the Gilding of Midway. Today we dive into the third part of the cell, Calculate part. Our focus in detail on analysis of the financial report. This is member of Blue, Nhật Ánh. This is Lisa. And three member is Ngọc Uyên, Như Quỳnh is me, and Khánh Dương. Next part, this is table of contents. And first is introduction, and second is financial approach, and third is non-financial approach, and fourth is stock evaluation, investment decision, and last is conclusions and filter. Let's start with introduction. Calculate Port joined stock company CLL. CLL was founded in 2007. It is a strategic joint venture between Saigon Newport Corporation and Ho Chi Minh City Young Volunteer Police Service Company for over 15 years. CLL has been the leading port operator offering full-loaded service and pioneering international multimodal transport. A key step was lifted on hold in 2014, improving finance and management under Chairman Nguyễn The port is known for innovation, being named an epic port in 1820 and using the sub-automation system. Regarding the industry overview, the Vietnam shipport sector is entering a strong recovery phase in 2024 to 2025. Specifically, in 9 months of 2024, it purchased 15.4% and imports claimed 17.3%. Furthermore, stable FDI enrolled 8.8% support cargo volume. The market remains highly concentrated, with Tonkin having 47% share. Currently, there is a trust market divergence. Shipping stocks benefit from high freight rate, while seaport stocks are on discount due to slower volume recovery. In terms of market position, Goa is the largest logistic gateway in the south, handling 82% of Ho Chi Minh City. Its capacity go get 10.64 million TEU at almost 100% efficiency. The main advantage is its location advantage being close to major industrial hubs, Ho Chi Minh City, Đồng Nai, Bình Dương, along with direct flight connection to Cái Mép. Get you a high-risk business model, mixing port operation and full logistics service. For stock view, the right is the under-discount ratio due to oversupply, but supported by a practical in logic and improved UTH demand in late 2025. Finally, let's cover the purpose and structure of the report. We choose Caroline first because it is the industry gold standard, holding an 82% market share in a major industry. Our goal is to use the squad framework to assess the company's strategy and really solve its financial health and profitability. Next part, squad model analysis. We highlight the five main trends. First is Canva is the largest sports system nationally with 26 ports. And second is Dream location connect directly to the industrial zone in Đồng Nai and Bình Dương, helping cut transport costs. And third, the port offer end-to-end service, complete logistics ICT. And fourth, the force maintained a strong network with major international shipping lines. And finally, Kaklai is digital range pioneer, boosting its efficiency and reputation. However, Kaklai faced a major weakness. The main issue is bad traffic infrastructure around the port, which cause constant congestion and lower performance. Also, the port cannot handle peak ships due to limited quantity and air restrictions. A result, capacity and land air full made out. In addition, warehouse yield 62.3% remain a constraint. Next, there are five big opportunities from the outside. And first, new projects like Bedrock 3 and will deliver on infrastructure push, helping increase rail capacity. And second, there is a clear lane for developing proof from the government. And third, Circular 39 allowed the port to address traffic right, raising the right sailing. And port trade is recovering export up 15.4%, ensuring more cruise flow, and finally, port stop our value achieved. Despite the changes, the port face serious threat. The biggest danger is the shift to deep water port. Presently, Ho Chi Minh City cargo share dropped sharply from 61% to 41% from 2009 to 2023, and second, there is oversupply, too much competition from new rival ports. The infrastructure bottleneck caused by a lack of synchronization between road, rail, and inland waterway drive up our floating costs.
Continue the presentation. I will talk about the financial analysis of Kaklai Port, known as CLL. In this session, I analyze CLL financial health based on the audit consolidated financial statement from 2020 to the first 9 months of 2025. By applying generalist and common size analysis to observe changes over time, as well as the company capital structure, our evaluation focused on two key areas. First is financial profitability, second is financial stability. I begin with the analysis of profitability. As you can see in figure 1, during 2020 to 2022, CLL faced a strong impact from COVID-19, especially a decline in revenue. However, an important highlight that the profit margin increased significantly. In 2022, the revenue dropped by 122.5 billion Vietnam đồng, but the net profit margin risen to 34.37%, up into 8.9% compared to 2020. This improvement was mainly driven by digital transformation solutions like EWMS and ePort Mobile, along with broader adoption of EDO system in 2022, which help optimizing operation costs and reduce administrative expense. Overall, even though the revenue was under pressure, profitability remained protected thanks to technology upgrade and better operation efficiency. Moving to the next period, 2023 to 2024, CL benefit from the shift of supply chain away from China and from the expansion of global logistics partnership. However, its profit margin narrowed because of the cost increase and cost investment. In 2023, the cost of goods sold increased by 4.14%, increased selling expense by 171.48%. In 2024, the margin decreased slightly again because of infrastructure investment, including road and yard, totaling up to 61 billion Vietnam đồng. This margin decline mainly reflects a short-term cost pressure and reinvestment activity, not long-term weakness and performance. Despite the profit margin narrowed, CLL asset utilization improved notably, so in better operational efficiency. As you can see, that asset turnover increased from 0.37 in 2022 to 0.45 in 2023 and 0.47 in 2024. This efficiency shows that the service quality investment all right sustainable value creation. Now in account to figure 2, the profitability ratio also shows that IEC indicator improved to 15.51% in 2023 and 50.53% in 2024. By the first 9 months of 2025, net income risen to 1 billion Việt Nam đồng, lifting ROE indicator to 16.5% and the profit margin to 32%. This result indicates that stable cooperation and increasingly effective operation, signaling the beginning of new growth cycle. Next, I will analyze financial stability. As you can see in Figure 3, equity consistent extend liability. The graph widened in 2023 to 2024, while debt remains stable. In 2024 to 2025, total assets and liability both increased, but the liability increased due to the divided payable up into 54 billion Việt Nam đồng, with zero long-term debt and mainly short-term payable. This stable capital structure provides a strong buffer against interest rate and liquidity risk and enhancing financial autonomy. In Figure 4, demonstrates that CLL maintains a consistent track record of high cash dividend payout, record at 36.8% in 2022, 26% in 2023, and 26.7% in 2024. The payout ratio has risen to 89%, reflecting a strong profitability and commitment to maximizing shareholder cash return. Looking ahead at 2025 to 2030, CLL outlook is very positive. The period is expected to be benefits strongly for major government infrastructure investment. Most notably is Ring Road 3, which start construction in 2023, and the new internal port road connect to Ring Road 3 to các lái port begin in 2026. With low debt level and stable operation, CLL is positioned to stable and sustainable growth over long term. CLL maintains a financial position that is stable, efficiency, and sustainable. However, the main challenge are external infrastructure issues rather than internal problem. Expansion is limited by the lack of land in the city and constant traffic congestion at the port access point. The factor delay cargo flow and dry up logistics expense. And that's it. Next part is non-financial by Uyên.
Hi guys, my name is Uyên and now I will continue my team presentations about the non-financial management of CLL. At các lái, CSR is more than just external initiative. It stems from a profound shift in internal governance and leadership. This trend is made by the appointment of Mr. Nguyễn as the full-time chairman in 2024. This signifies a proactive level of accountability. We see the major shareholder moving from a passive monitoring role to one that actively steers strategic decisions toward greater transparency and sustainability. Essentially, this organizational transformation has positioned CSR as a core internal governance driving force. And we move to our first pillar, environmental responsibilities, which is the focus of our non-financial analysis. CLL Green orientation is built on the strong foundations of the 2018 APEC Green Port Award, which naturally aligns the port with the government's plan 710 platform for green port development. This strategic focus reinforces our commitment to be a key partner in the green supply chains and the National Net Zero 2050 roadmap. of green infrastructure investment from 2023 to 2026. We are deploying solar power, currently operating 18 electric ranges, and planning an electric vehicle fleet supported by a 2 MW solar power station from 2025 to 2026. Crucially, through digital transformation, we are cutting vessel waiting time by 50% and simultaneously increasing our capacity to 6 million TEU, which is significantly reduced operational emissions. Our commitment extends actively to the communities. The Tân Cảng Sài Gòn Children Program is a flagship initiative, directly supporting over 500 children and providing gifts to more than 2,200 others. We conduct community outreach, including free medical examinations and treatment, and blood donation drives in provinces like Kontum. Furthermore, our S&B care application has extended health knowledge to nearly 10,000 users, expanding our social impact digitally. Within the social responsibility pillar, we begin with our commitment to employees. CLL views human capital as the essence of our long-term strategies. We are dedicated to cultivating a work environment that is safe, green, and highly efficient. This is complemented by a comprehensive welfare programs. Professional development is prioritized through regular vocational competitions and dedicated digital training programs. And our economic responsibilities is defined by two key elements: transparency and balance. For transparency and compliance, CLL provides 10 periodic reports annually to various state agencies, covering defense, transportation, environment, and labor matters. This also reports national security and regulatory adherence. And for balance, the company skillfully balanced long-term risk investment with shareholder returns, evidenced by a significantly high dividend payout ratio of 98%. In conclusion, Các Box has successfully transformed CSR formally a movement into a core operational strategy. Within the trends, the primary strength lies in the successful alignment of reinforced targets, like the APEC Award, which consists operational efficiency driven by digital transformation. We also maintain strong compliance with international standards. However, there are areas for improvement, specifically our environmental goals currently lack quantitative indicators for performance such as specific energy saving ratio. Similarly, social activity needs a better impact measurement system to quantify the total value delivered to the communities. Despite the limitation, the established balance between the operational efficiency, international compliance, and sustainable value creation provides a solid foundation that will reinforce CLL long-term competitive advantage. And my presentation is the end. I would like to invite Khánh for the next part.
So now moving on to the last part, which is about the stock performance and stock evaluation of Các Lái. Firstly, looking back at Các Lái performance since 2020, we can clearly identify four different phases. First, the liquidity-driven environment of 2020 and 2021 propelled the share price from the 18,000 Vietnam dong level up to 24,000 Vietnam dong. However, immediately following this, in phase 2 since 2022, macroeconomic headwinds completely erased these gains, forcing the price back to its baseline. The highlight of this journey lies in phase 3, spanning from 2023 to the mid of 2024, underpinned by a robust expansion in ROE to nearly 16%, the stock staged a spectacular breakout, surging to an all-time high of 38,000 and currently they have entered phase 4. The stock is consolidating around a level of 30,000 Vietnam dong. This represents a necessary pause, allowing the market to re-rate the business valuation. And now, moving on to the valuation. CLL is currently trading at a deep discount with a PE of 10.05 and a PB of 1.72. This valuation reflects a current asset value rather than the future growth potential. And when compared to a market leader like Chebidat, this valuation gap is strategically justifiable. GMD commands a growth premium due to its deep-water expansion, whereas CLL's lower multiple reflects market caution regarding capacity saturation in the Ho Chi Minh City area. However, the key insight lies in the comparison with the Newport. While both of them trade at similarly attractive PE levels, CLL demonstrates superior value in terms of asset quality, with a P/B ratio of just 1.72 compared to the Vu ratio of 2.03. CLL offers a significantly better asset-based margin of safety for investors. And now to conclude my part, the valuation basis of CLL market prices CLL on the current asset value, but not the future growth potential. The key drivers are low PE and moderate PB, reflect confidence in stable cash flows. The future return is high in visibility on sustainable dividend payouts from 2025 to 2026. And now to conclude all of our presentation, my friends will continue.
So let's make conclusion. To conclude our own list, let's summarize the outlook for the fourth phase on financial and non-financial factor. On the financial, the company maintained strong margins and high profitability with ROIC and asset turnover improved, indicating better efficiency. The company is characterized by very low debt and stable cash flow, resulting in a low risk, high reliance profile. For non-financial factors, the foster environmental leadership through its transport initiative and digital optimization. It has strong social program and transparent governance. Recently, CSR is integrated into its core strategy, not just a symbolic effort. And finally, the potential confirm a positive future. The first Masterland ensures long-term growth through capacity expansion and stronger connectivity. This goal is supported by key driver new infrastructure, the rising tailwind from circular 39 and trade recovery. In summary, the overall outlook is positive, scalable, and the risks are manageable. Thanks for listening. It is referent. Next, it is reference.